Hello, very good afternoon. You're watching Midcap Radar on CNBC-TV18. I'm Ekta Batra and with me is Sonal Bhutra. Well, it's turning out to be a session where it is absolutely mixed on the screen at this point in time. It is the midcaps as well as the financials which are taking a little bit of the brunt in terms of profit booking. So the midcap index is down around 0.6% and the bank Nifty is down at around 0.8%. The Nifty just about holding its head above the water at around 17,753. Lot of specific stocks in focus, the Nykas and the Zomatos and the deliveries of the world, and separately a lot of traction in a couple of these hospital stocks as well as a lot of the mid caps.
Oh yes, hi Ekta, and we are awaiting Dr. Reddy's and Maruti as well. So of course those two big stocks will be in focus as well. From the broader markets,
Dr. Reddy's it is expected at least between 3 to 4. That's what I've been told.
All right. So on Midcap Radar we won't be awaiting those numbers for now at least. But in the broader markets, as Ekta was pointing out, a lot of stocks which are in focus from the oil and gas space. I have Petronet LNG which is high by 3.5%. It has been a laggard for the longest time, but today is some buying seen there. Oil India is the other one. We have some other stocks from the energy space as well. NTPC, ONGC, all of them are doing really well. But largely markets are volatile. So let's start with the top headlines and then we'll discuss all the individual stories. Market largely flat in a volatile session. Midcaps underperform. Metals, pharma and realty slide. Energy gains.
Nykaa hits a fresh low intraday as the one-year lock-in for the pre-IPO investors ends early next month. The stock recovers slightly but continues to trade sharply below its IPO price.
Tata Chemicals slips after its second quarter margin falls short of street expectations. The management says Q2 and Q3 are seasonally weak as they see lower volumes, and they maintain that the company's clients have not witnessed any recessionary impact so far.
Gokuldas exports gains on strong revenue and profit growth. The management tells CNBC-TV18 that the fashion segment demand remains resilient and the company is targeting a revenue of around 2,300 crores this fiscal.
Okay, all right. Those are the top headlines that we are tracking. The mid-cap side of things not looking so good. That index is down 0.6%. And we also have the advanced decline ratio right now in favor of the declines. At the day's low is that particular index. So let's do one thing. Let's focus on the mid-caps itself. This is our special segment, Mid-Cap Movers. And we have Vivek with us, as always, to take us through the mid-caps that are in focus today. Hey, Vivek, good afternoon.
Good afternoon. Quite a muted session when it comes to, the entire mid-cap space. But a few stocks that we are focusing on. First on our list is tourism finance. Now, remember, last month we had highlighted about how two of the promoter entities had actually exited a significant stake via a block deal. And yesterday, again, an update to the exchange saying that they have now gone ahead and given a notification saying that they want to cease to exist as promoters. And this is something on the back of new promoters coming in. We are actually seeing quite a significant surge. Narayana Health today doing very well in the session. Stock at a fresh 52-week high. Honeywell Automation today on very, very strong volumes. It's up for the fourth straight session. And Petronet LNG, after quite some time, today is seeing quite a bit of short covering. Now, on the other hand, we're also showing some of the chemical stocks. And Vishnu Chemicals, a couple of domestic brokerages have upgraded the stock. Edelweiss too has a buy rating. And, this particular stock is up almost 5%. Kiri Industries too today is seeing a very good move on very high volumes. On the other hand, when you're talking about some of the losers, delivery continues its downtick, after the week operational update. Now, the stock is almost down 40% in the month of October. Piramal Pharma, after the listing continues to move downwards. Now, Piramal Pharma, there continues to remain the overhang of the MSCI Standard Index exclusion. Yesterday, once again, there was an update saying that because the stock hit the lower circuit, they couldn't remove it. So again, tomorrow, you're expecting the outflow of the MSCI deletion. Schaeffler India and DCB Bank too seeing quite a bit of a cool-off in today's trading session.
Okay, yes, well, good spotting there, Vivek. Thanks very much for that. Piramal Pharma is one stock that I've been looking at as well, all the way since the time it got listed or after the demerger at over 200 odd rupees. It's really seen a bit of a downtrend. But let's talk about the technicals of the markets. Himen Kapadia joins in this afternoon to tell us what he's tracking on this Friday. Himen, hi, welcome to the show. I was just looking at the chart of Maruti. In the past couple of sessions, it's moved up from around 8,700 odd levels to where it is at today. It's coming out with its numbers today. How would you approach it?
A very good afternoon to you, Ekta. Thank you for having me. I wouldn't like to second guess the numbers, but on technical, the technical setup has improved. It has formed a rounding bottom on the daily chart, Ekta. That's a bullish formation. We have resistance at 9200 and 9450. Setup has improved. The bigger picture seems promising, but like I said, won't second get the results. But yeah, the setup has improved.
Okay. And in that case, Hemain, what would your individual technical picks be?
Okay, two buys and one sell. Firstly, a buy on Voltas. Deeply oversold, positive divergence seemed set for a recovery. We're looking at a bounce. So a buy on Voltas at 875, stop loss 8660, target 905. Secondly, a buy call on UPL at 710, stop loss 690, target 7150. We are in a short-term uptrend on the verge of overcoming the 55-day exponential moving average. Mechanical indicators are a buy on the daily chart. Stock seems set for a further upside. Lastly, a sell on Federal Bank, but it's a conditional sell at 132, stop loss 136, target 124. We've seen the Bank Nifty cool off, but particularly Federal Bank looks heavy, stretched, overbought. We've seen distribution happen, and now we're looking at a downside. So two sells and one buy.
Okay, all right, Hemain. Thanks a lot for joining us and taking us through your technical picks, and have a great weekend ahead. Well, that's the technical view on the markets. For now, they continue to be steady. Nifty has fallen further from the top, so it's absolutely flat, but with some positive bias. We'll do one thing. We'll slip into a short break, and up next, we'll be joined by Mr. Vijay Thadani, who is the Vice Chairman and Managing Director at NIIT, to discuss company's Q2 earnings. Stay tuned.
Welcome back. Well, let's get talking about a couple of stocks which are in focus. Tata Chemicals, in fact, moved to the lower point of the trading session. This was after its conference call, which was held during market hours. So as you can see, the stock is now down around 4.5%. Sonal was listening into the conference call. Sonal, apprise us of what the management said. What might have been the key concerns?
Well, I think volumes were the key concern this time around, but management commentary largely was positive, Ekta. But just to get you through the numbers, it was a margin miss, as we have been highlighting, and that is something which spooked the street today. But revenue growth was strong. We saw profits growing by 176%. Basic chemicals is where we saw a margin decline of 510 basis points on a quarter-on-quarter basis, but it was an increase on a YY basis. This is because of lower volumes that the company reported. If we talk about the specialty chemicals business as well, where revenue grew by 27%, margins were up 170 basis points, but they were down 80 basis points. So in their conference call, they alluded to the fact that yes, volumes were down, but that was because of a maintenance shutdown. But there is favorable demand-supply scenario. They expect soda ash prices to continue to remain strong. They do not see any softening because of the situation remaining very tight globally. UK and Kenya market, they were very strong this time around, but that was because of a one-time impact in Q2. That one-time impact will continue in Q3 as well. So UK and Kenya market margins will remain range-bound. They might decline from current levels as well once that one-time impact comes down. Margins in other geographies like US and also India will continue to remain at stable levels or may even improve from here on. Q4, they will see some pricing changes because some of the contract renewals, and they continue to see improvement in export pricing. European gas prices has been a big pain point for companies that have exposure to Europe. They have started coming down a little bit now, so they are insulated to those levels. So nothing big bang in the commentary, but yes, margin pressures, margin lower than estimates, so to say, and also because the stock has done really well this year, so some profit taking is what we are seeing today, Ekta.
Okay, all right, so that's on Tata Chemicals. But the other stock in focus is Gokuldas Exports, which is in focus on account of strong revenue as well as profit that they've reported in the second quarter. Vahishta is here with more details on the performance this time. Vahishta, over to you.
Thanks for that, Ekta. Well, the revenues have jumped 28% in the past quarter, but remember this comes in a seasonally weak quarter. Also, the margins have actually dipped a little bit to 11.8% versus 13.1% in the same quarter of last year. The company has said that the retail sales in Europe and China is not very great. However, US market has held up reasonably well. The US retail offtake in the first half of the ongoing calendar year is higher than the first half of any of the past years. Also, the export revenues for the company as a whole has grown by 24% on a year-on-year basis, and the company has a strong cash balance of approximately 400 crores. They have incurred a capex of 51 crores in the first half of FY23 and expect to incur another 106 crores in the second half of the ongoing financial year, while for FY24 the capex expectations are higher at 125 crores. The management has also given a guidance on the outlook, wherein they say that they expect Q3 of FY23 to remain a little bit flattish on a year-on-year basis. But with extended summers, the demand for summer products should be reasonably robust. So some good commentary over there. However, the key factors to watch out would be the sentiments during the holiday season, which sums up all the way up to Christmas. And US is looking at alternate opportunities for sourcing from India for replacement. So something like replacing China, and hence it could benefit Gokuldas exports.
All right, Vaishna, thank you for those details. In fact, earlier today we caught up with Shiva Ravakrishnan Ganpati, who is the MD at Gokuldas Exports, and he spoke about company's business outlooks. Take a look.
Quarter 3 is going to be a quarter to watch. Globally, there is a lot of things going on. There are headwinds in Europe, headwinds in US, and headwinds in China as well, where retail sales is not so great. We are building the capacity in anticipation of certain orders. Obviously, if the growth exceeds our expectation, we will not shy away from putting in more capacity.
Okay, well, on that note, we need to take a short break. But before we do that, here's some great news for our investors. You can now track the US market real time on Money Control. Just log on to the website or the app and stay informed about all that matters in the global markets. Take a break and be back.
Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. As promised, we'll get chatting with the management of NIIT Limited. Posted a weak set of quarter 2 numbers on a YY basis. The stock is down 2.5% as we speak. Mr. Vijay Thadani, the Vice Chairman and Managing Director of the company, is joining us now. Mr. Thadani, good afternoon. Thanks a lot for joining us. Well, I was looking at your businesses. You have two segments. One is CLG and the other one is S&C. In the CLG business, you had earlier guided for a growth of 3% on a sequential basis on constant currency terms. It has declined by 5% on a sequential basis. What led to this, and what is the outlook going forward?
Yeah. So, first of all, thank you very much, and thank you for all the nice words. CLG business, we did guide at the beginning of the year for a single-digit growth on a quarter-on-quarter basis between Q1 and Q2. And on 30th September, based on the track record that we had, or the results that we had of the previous, of the last 3 months, we did issue a pre-announcement guidance and update where we said that we are likely to see a negative growth this quarter because of a sharp decline in consumption with one large client. And that is what it has worked out to be, and that is what we are reporting right now. So it is consistent with the update that we had given. We had also said that this speed bump is likely to be recovered from in the coming quarters, and we will be back on a QOQ growth for the balance part of the year, and therefore we'll end the year on a high single-digit year-on-year growth in revenues.
Okay. So you are expecting maybe some amount of makeup in the second half of the fiscal, despite this volatility that you've seen from one particular client. In fact, can you give us how many customers you added in the quarter in the corporate learning group segment? And what are you guiding for in terms of addition of clients? What is your visibility?
So typically we have been adding, so there are 2 or 3 good things happening there. Our client acquisition track record continues to be either the same or accelerating. So this year, this quarter, we have added 3 new clients, 3 new logos, and have also had 100% renewal record continuing with 3 renewals that we signed this quarter. Our revenue visibility is at $305 million, and we have 70 active MTS clients, which is the way we define CLG's customer universe in terms of the big clients that we service in managed training services. And in the coming quarters, we do have a very, very healthy pipeline, and in fact are likely to see an improvement in our quarterly metrics of how many we add every quarter. Not only that, we also are very confident of maintaining our renewal record that we have had for all this time.
Okay. So positive commentary on your corporate learning group segment, but generally we also talk about your skills and career group. This is one business which has started turning around, EBITDA break even in the quarter gone by, this time around 3% margins out here. Are you continuing with your growth guidance that this will either break even this year or even actually report an EBITDA growth this time and a 50% growth? And what is driving this for you this time?
Yeah. So yes, first part of the question, the answer is yes. It had 119% year-on-year growth in this quarter and 3% EBITDA. This business is actually shaping up well. Just to remind ourselves, and therefore will end with 50% plus revenue growth as well as a small EBITDA margin. What we have to remember is that this part of the business is in an investment phase, because we went through a huge transformation exercise and we are right now investing in this business for its growth. This is not its steady state volume. Its steady state volume should be 4 or 5 times this. And that's what I think we are heading for. So in this investment phase, there will be times when there will be small, the investment may be a little excess of the return that the business is generating. But overall, for this year, we are holding on to this margin and this revenue growth projection. And I think the business is shaping extremely well. There are 3 components which are contributing to this. There is the stack route, which is our deep skills boot camps, which are doing exceedingly well. In fact, have grown very significantly. TPAS, where talent pipeline as a service, that is very well appreciated and has become a very strong part of our overall business. And the third is RPS Consulting, which was the business that we acquired about a year ago, which has done exceedingly well in the last 1 year.
So go ahead.
No, you go ahead.
I just wanted to ask you about acquisitions, because you did mention RPS Consulting, and then you did make an acquisition of an AI or hybrid workforce-focused company, Knowlescape, some time ago. Tell us, what is the plan when it comes to acquisitions for the remaining part of the fiscal? How much cash do you have on books? How much are you willing to deploy? Is there any visibility that you can provide us?
Many questions in one. So, okay, let's go one by one. Knowlescape is not an acquisition. It is a minority investment that we made.
Yeah.
It is an investment that we made, and we are very, very excited about that, because that is investing in a very strong engine, which will not only have the benefit of the investment and its return, but also the fact that it fills a gap in our offering to our customers, and we see a large benefit coming to us from the revenue and the business opportunities that it will generate. So Knowles, very proud of and very excited about, and there will be more such opportunities that may be coming. Okay. Declared that inorganic growth is an important part of our growth. Knowlescape to our business strategy will add a lot, but to our P&L, because it's a minority investment, will sit under the EBITDA line, the benefits of that. Okay. However, what we are looking at and constantly evaluating our other inorganic opportunities, and in fact have accelerated that focus, because when times are down, at that time more interesting options and assets become available, and we have to be prepared for that. So there are a number of discussions, and as and when they materialize, that's when we would be talking to you about.
Of course, we'll speak to you then as well. Last question before we let you go. How much is digital a part of your overall revenues? Is it a pie that will grow even further from current levels?
Actually, everything that we do is nearly digital now.
Okay.
So digital, TPAS is fully digital. RPS, large part of their business is fully digital. CLG, a very significant part of the business is digital. We are a digitally transformed organization. Now, the question is, we have to find the right mix between on-prem or physical versus digital balance, which is what we believe that hybrid will be the future of learning.
Okay, all right, Mr. Thadani, thanks a lot for joining us and taking us through what the plans for the company are and taking all our questions as well. Well, that's the word coming in from NIIT Limited. They are expecting high single-digit growth this year and are in the investment phase in their S&C business. Stock still down 2.5% on the back of some weakness that we saw in revenues and profitability this time around. For the markets, Nifty is in the red, down 6 points as we speak. We have the Bank Nifty, which is putting a lot of pressure. It is at the day's low with cuts of 440 points. And the advanced decline ratio that has worsened. So the Midcap index also deep in the red, down 220 points as we speak, Ekta.
Okay, all right. Well, on that note, I think we can wrap up on Midcap Radar. Just watch out for Dr. Reddy's as well as Maruti, because those two would be in focus on account of their numbers, which could probably be released in the second half. It's all the time that we have on Midcap Radar. Your stocks once we're back. Stay tuned.
Co-powered by